Are you tired of handing over a huge chunk of your hard-earned money to the government every single year? For most working folks, taxes are their single largest expense, even bigger than their mortgage or their rent. Think about that for a minute. You work hard all year long, putting in the hours and making sacrifices. And what happens? A massive portion of that effort gets siphoned off before you even see it. It can feel frustrating, like you're on a treadmill and someone keeps turning up the speed. But listen, it doesn't have to be this way. You have more control than you think. This isn't about shady, illegal schemes. It's about being intentional and smart with your money. It's about understanding the rules of the game so you can play to win. Tax planning isn't a dark art for the ultra-rich. It's for everyday people, teachers, mechanics, nurses, small business owners, and you. It's about making a plan. You wouldn't build a house without a blueprint. Don't navigate your financial life without a tax plan. When you fail to plan, you plan to pay more than you need to. We're going to change that. Right here, right now. This isn't getting a gotcha on the IRS. It's about being a good steward of your resources. You work too hard to give your money away unnecessarily. We're walking through this together, step by step, with a clear, simple plan. I promise 3 big wins if you stick with me. First, keep more of your own money, legally. Use it for what matters, paying off debt, saving for the future, being generous. All right, let's pull back the curtain on taxes. A lot of people get intimidated by all the jargon and complicated forms, but I'm telling you, the basics are simpler than you think. You don't need to become a CPA overnight, but you do need to understand the fundamental concepts that determine how much you pay. Think of it like learning the rules of a sport before you play. First up is your taxable income. This is the magic number. It's not your total salary. It's the amount of money the government actually gets to tax after you've taken certain adjustments and deductions. Your goal, plain and simple, is to make your taxable income as low as legally possible. Every dollar you can shave off this number is a dollar the IRS can't touch. Next, you have to understand the difference between a deduction and a credit, because they are not the same thing. A tax deduction lowers your taxable income. If you're in the 22% bracket and you find a $1,000 deduction, you save $220. It's good. We want all the deductions we can get. But a tax credit is a whole different level of awesome. A tax credit is a dollar-for-dollar reduction of your actual tax bill. A $1,000 tax credit saves you $1,000. It's like the government is handing you a gift card to pay your taxes. Credits are pure gold at tax time. Then there are tax brackets. People get so confused by these. Oh no, my raise will push me into a higher tax bracket. That's just not how it works, folks. Our system is progressive, like buckets. You fill the lowest rate bucket first, then spill into the next. Only the dollars in the higher bucket get taxed at that rate. So a raise is always a good thing. Don't ever turn down more money because you're afraid of taxes. Finally, your filing status matters a great deal. Are you single, married filing jointly, married filing separately, or head of household? This affects your tax rates, your standard deduction, and your eligibility for certain credits. For most married couples, filing jointly is the best move. Rare exceptions apply. If you're a single parent providing more than half the support, head of household can be a major advantage. Choosing the right status is the first step to a successful return. Don't just check the same box as last year, verify it's still right for your life today. Now let's talk about the common blunders people make that end up costing them a fortune. These are the financial potholes that can wreck your budget. The number one mistake, without a doubt, is a complete lack of organization. You toss receipts in a shoebox. You don't track donations. You forget that February medical bill. Then April hits, you scramble, and you miss things. Treat your finances like a business. Build a simple system, a folder, an accordion file, a spreadsheet, an app, one place for every potential deduction and credit. Another huge mistake is ignoring retirement accounts. Contribute to a traditional 401k or IRA. You're funding your future and lowering taxable income today. Put $5,000 in your IRA and your taxable income drops by $5,000. Wrong withholding is another trap. A big refund isn't a gift. It's an interest-free loan you gave the government. Aim to be near zero. Owe a little or get a small refund. Freelancers, pay quarterly estimated taxes. Set aside 25–30% of each check in a separate account and pay 4 times a year. Avoid penalties and pain. Section 4. The 3-step win. Your game plan for immediate savings. I want to give you a simple 3-step plan that you can put into action today. Step 1. Get a clear picture. Pull last year's return. What was your total income, your taxable income? Which deductions and credits did you take? This document is a roadmap of your financial life. Read that story and find opportunities for a better ending this year. Step 2. Make one specific change now. Don't boil the ocean. Pick one thing this week. Auto 401k contributions. Increase your percentage. Track mileage, or organize charitable receipts. Small, consistent actions lead to massive results over time. Step 3. Schedule a meeting with a tax professional. The tax code is huge. Get a coach, not just a scorekeeper. A good advisor is worth their weight in gold. So there it is. Review, act, advise, repeat every year. It takes the overwhelm out of tax planning and breaks it into simple, achievable steps. You can do this. Let's go on a treasure hunt. There are dozens of valuable deductions and credits that people miss year after year. It's like having winning lottery tickets scattered around your house and never checking the numbers. One commonly missed credit is the American Opportunity Tax Credit, up to $2,500 per student for the first 4 years of college, and up to $1,000 is refundable. Medical expenses can be deductible above 7.5% of AGI. Big years, surgery, dental, fertility, prescriptions, and smaller items like after-tax premiums, medical mileage, hearing aids, necessary home improvements, track everything. Saving for retirement? You might qualify for the Saver's Credit, a credit that stacks with your retirement deduction. Don't forget non-cash charitable donations. Make an itemized list, use a valuation guide, and if you exceed $500, file the extra form. It's still worth it. Freelancers, you're running a business. Track every expense. Mileage, a portion of phone and internet, supplies, software, courses, health insurance. Use a spreadsheet or QuickBooks. Self-employed. Investors, the code rewards patience. Under a year is short-term at ordinary rates. Over a year is long-term, often 15%, even 0% for some. Buy and hold builds wealth and is tax-efficient. Be an investor, not a speculator. Families, the child tax credit can directly slash your bill. Pay daycare or camp. The child and dependent care credit helps. 529 plans. Contributions aren't federally deductible, but growth and qualified withdrawals are tax-free. A fantastic way to save for college. Everyone should consider retirement contributions. Traditional 401k, IRA for deductibility now. Roth 401k, IRA for tax-free growth and withdrawals. Expect higher bracket later. Choose Roth, lower later. Traditional. Many benefit from a mix. Knowledge is great, but it's useless without action. Use digital tools. QuickBooks, Wave, FreshBooks to connect to your bank and auto-categorize. For personal budgeting, Mint, every dollar, see where your money goes. For filing, TurboTax, H&R Block are great for a simple W-2 with the standard deduction. But with side hustles, rentals, investments, or kids in college, get a pro, an enrolled agent or CPA who specializes in individuals and small business. Your journey doesn't start next April. It starts today, November 24th, 2025. Homework. Schedule year-end planning. Pick one strategy. Boost your 401k, track mileage, or open a separate freelance account.